Hi traders, it's Roberto for FX Northwest and welcome to the tutorial. This first lesson is on directional bias. There are 4 or 5 things that I look for when I analyze markets, and the first thing is different time frames. I start with a daily chart, and then I look at a 4-hour chart and a 1-hour chart. I use a moving average lines, a 100, 200, and a 20 stochastics indicator and MACD. So the first thing I do is we're looking at CAD yen. So I look at a daily chart to determine the overall direction of the market. So starting from, I guess from back in March, CAD yen had been in a strong downtrend. Price is below the 200 moving average line. It went above the 100, but it just resisted that 200 moving average line and it just started heading south again. Okay, at about April the 23rd. So let's start from there, April the 23rd. And I'll highlight that whole period till now. Then I'll switch over to a 4-hour chart and notice that from when price broke below, the 20 moving average line broke below and price broke below on a daily chart, it did the same on the 4-hour. So I'm looking for the 4-hour and the daily chart to mirror each other. And they pretty much did for this whole period, this whole shaded area. So I'm always looking for selling opportunities if the 4-hour and daily chart are basically mirroring each other. And I use the 1-hour chart. I'll scroll down to the 1-hour chart for my entries. And what I'm looking for is a few things. I'm looking for stochastics to be overbought. I'm looking for the 3 lines of MACD, the 100, 200, and 1-hour MA moving average line to mirror the 4-hour and daily chart. And then I start looking for entries, waiting for stochastics to be overbought for my entries. Notice that here and here, and then pretty much market just turned around and headed south. So you don't want to take a trade when stochastics is oversold, because all it's going to do is retrace before it comes back down, and you're going to be sweating it out for a number of hours before it goes in your direction. So it's better just to have the patience, wait till stochastics is overbought, because you're trading in the direction of the daily and the 4-hour chart, and all you need to do is wait till stochastics is overbought and also look for a candlestick pattern that will confirm what you're seeing. So here we have an inside bar. Stochastics is overbought, so that would be a good entry. Let's look at some other pairs. So again, looking at a daily chart, determine the overall direction of the market, and then scroll. Once you know that you're in a downtrend on the daily chart, then scroll to the 1-hour chart for your entries. Let's look at another currency pair. Here we're looking at pound yen, the same thing. On a daily chart around May the 15th, I think, 20 moving average line crossed below the 100 and 200 moving average line. So this confirmed that pound yen was heading south. Okay, before that, it wasn't really clear. Price is just bouncing up around, but it did break a major support level back in May the 7th, and then it continued to slide. Then I highlight that area, confirming a downtrend. I'll switch to the 4-hour chart, and I'm looking for the 4-hour chart to mirror the daily chart, and it did. Notice 100, 200, the 20 moving average line, they're all separated, angled at a 45-degree, and I'm looking for the market to rally to sell. So anytime the market's in an uptrend, I'm looking for, when there's a retracement, I'm looking for a candlestick pattern so I can sell. So I'm selling on rallies. The 1-hour chart I use for my entry. So I'm looking for stochastics to be overbought and a candlestick pattern. Here we have a bearish engulfing candle, stochastics is overbought, and there's a trade. Here another bearish engulfing candle, stochastics overbought, and a sell-off. Okay. Let's look at a couple more. Aussie yen. Look at the daily chart. It's been in a strong downtrend since back in April 24th. But the 20 moving average line on the daily chart did not cross till May 12th. Okay. And that's one thing that's very important to know, that moving average lines are lagging. So you may see a trade before these lines set up, and probably it would be a good trade, but you don't have the confirmation yet. So let me highlight that area. From here to here, we're in a downtrend. I'll switch over to the 4-hour chart. Notice that the moving average lines are slanted down in the direction of the daily chart. And then I switch over to the 1-hour chart for my entries. Waiting for stochastics to be overbought. Looking for a candlestick pattern to sell. I'm trading in the direction of the trend. Even though price is above the moving average lines on the 1-hour chart, we're taking a trade in the direction of the 4-hour and daily chart. And you could have waited till everything lined up, but you would have missed out on quite a number of pips over here. Okay, 40 pips, which is okay. There's your confirmation on the 1-hour chart. You still would have made money on this trade. So everything is lining up on a daily 4-hour and 1-hour chart. The moving average lines are slanted down on all three time frames. That's a strong downtrend. Okay. Let's look at the trade signal that was sent out on Euro Yen, I believe. 1 second here. There it is. We had a trade signal sent out, I believe, last week with a target of 121. Currently is at 121.32. The entry was here. We had on a 1-hour chart. Let's switch over to the daily chart. So again, we do your top-down analysis. Okay. First thing we do is look at a daily chart. What is the overall direction of the market? Obviously, it's in a downtrend. Moving average lines are slanted down. Price reaches the moving average line, then hits a brick wall, and it just turns around and heads south. And notice on a daily chart, anytime the market stochastics indicator was overbought, it just turned around and headed south. And it had candlestick patterns, reversal candlestick patterns in each time. Here we had a bearish engulfing candle. Here we had a breakout trade to the downside. And here we had a hammer. In these two areas, the market was overbought on stochastics, and MACD is below the 0 line. So these three things are important. Moving average lines that are slanted down, stochastics overbought, and MACD indicator is below the 2 lines, angle is separated to the downside. So I know from, if I highlight this area, indicating we're in a strong downtrend on a daily chart, then I just switch over to the 4-hour chart to confirm what I see on a daily chart. And essentially the same thing. They mirror each other. The daily and the 4-hour chart are mirroring each other. And all you need to do is scroll down to the 1-hour chart and wait for the market to be overbought on stochastics and a candlestick pattern to enter a trade. Okay. So let's look at one more trade setup. Switch over to a daily chart, New Zealand yen, New Zealand yen. Here's the area that there was confirmation on the 100, 200, 120 moving average line. So let's highlight that whole area. Switch over to the 4-hour chart. And notice that's angle and separation on the 4-hour chart, mirroring the daily chart. And then I'll switch over. So once I see this, that the daily chart and 4-hour chart essentially look the same, I switch over to the 1-hour chart and start looking for reversal candlestick patterns on a 1-hour chart. Okay, here is a bearish engulfing candle Stochastics is overbought. Great trade. Here's an inside bar. Stochastics is overbought. Next candle closes below the inside bar, which is our confirmation that we need. There's a trade right there. Here is what is typically known as a breakout trade, where we have about 5 hours of consolidation, and then the market breaks below consolidation. Stochastics is overbought. We have a nice trade to the downside. So that's it for our tutorial. If you have any questions, please email me. Thanks for watching, and have a good trading week.